welcome to Business Morning. It's a semi-final trade for this week. Now, we've seen the market still, give up some gains, but still looking positive right now, talking about the local bourse. But let's get to the top stories that set your agenda before you start that trade today. Let's look at oil prices there. We're still seeing that range play right there. That's for Brent and WTI, but it's in the green this morning, $65.91 a barrel. We're seeing lower lows at this point, and we did get that projection that we could see a $60 oil. That's from the EIA there. WTI crude, $62.89 a barrel. Looking like it's heading towards the sub 60 at this point, 0.37%. That's the uptick for this morning. So is that range trade we're still seeing at this point? Let's find out more now and get a check on the commodities market. We have Dr. Ifeoma Nwokolo, who's the Vice President, Economic Research, Financial Derivatives Company. Great to have you on the show. Good morning. Good morning, Dr. Nwokolo. So let's look at oil production, because we always like to take stock on how much oil Nigeria is producing, and other countries, according to OPEC, there and most of the members. We see in July 2025, Nigeria's crude oil output exceeded OPEC's quota of 1.5 million barrels per day. That's around 1.559 million barrels per day, according to OPEC and secondary sources. Then we have from here 1.78 to 1.8 million barrels per day, based on NUPRC report. Talk to me about why we see differing reports, at this time. Is this something we should just get used to? All right, we'll try and get Dr. Nwokolo back again. But, definitely we're still looking at oil production. If we can get more oil out of the ground, definitely that's more revenue for Nigeria. We need all of that FX coming in. All right, to other matters now. We see President Bola Tinubu has directed the Ministry of Finance to review all deductions and revenue retention practices by key revenue-generating agencies. The Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, announced the development while briefing journalists after the Federal Executive Council meeting presided over by the President. The directive is said to be part of efforts to free up funds for investment and accelerate economic growth. Take a listen.
Has directed the economic management team, which I have the honor and privilege to lead, to look into the issue of review of the deductions from the Federation account, costs of collection by FIRS, Customs, NUPRC, NIMASA, and others. And likewise, NNPC has charges of 30% management fee and 30% management of the Frontier Exploration Fund, and we are charged with ensuring that in order to optimize every naira available for investment, we look at these particular charges and come up with our perspective that will focus on essentially reviewing those deductions.
All right, let's head straight to the markets now. As of its most recent close, the NGX Insurance Index that surged about 7.94%. That was the close for yesterday. That's about 1,616 points. This dramatic uptick adds to a staggering run so far in 2025, up 119% in H1 2025. Underscoring the sector's exceptional recovery and investor enthusiasm. We've seen a rally of 41% just last week alone. That's for the whole of last week. That's for the insurance index, highlighting mounting short-term momentum. That's soared over 24% this week already, with the trading days we've had this week from Monday up to Tuesday. But we're seeing a simmering down, so far there, with yesterday's close about 7.something%. That's talking about the insurance index, the close yesterday. Let's bring in Mr. Abiodun Kerikwe now. He's the MD, Afrinverse Research and Consulting, joining me right here in the studio. It's great to have you. Good morning.
Good to be here, Laddie. Thank you for having me.
What a run.
Yes.
It's almost like breakneck speed, when you're looking at the NGX Insurance Index. Mm-hmm. And I guess at this point, is it just the reforms, the Nigeria Insurance Industry Reform Act? Is that the only thing driving this index, or there's more that we don't see?
So, I mean, I think there's more that it has started earlier than now, but we just didn't see it. So if you take your mind back 2014, look at the numbers that came out from the sector in terms of gross premium rating, that went up 71%. And for the first time in history, the industry or that sector pretty much grossed 1.1 trillion in gross premium rating. That's significant for a sector or an industry that over the last 10 to 15 years, I mean, the numbers have been quite appalling. And this, if you situate this in the context that there's still many challenges facing the sector. If you look at it from an insurance penetration level, people talk about this a lot. Nigeria, compare it to the rest of Africa and some of the MENA countries in the MENA group, you see that penetration for Nigeria is still significantly low. Way below a percent.
Below 1%.
Below 1%. So if you situate that and then think about it with the cultural beliefs and our cultural system that says people really cannot patronize or don't like to patronize insurance because of a system of belief, you then ask why, what's driving these numbers? So you then come back to macro variables. You agree with me that inflation has been quite aggressive over the last 2-3 years. FX also has been quite aggressive. We've seen the Naira, I mean, we don't want to use those words, depreciate and all of that. I mean,
we're
the
seeing
Naira,
weakness,
yes,
but there's also stability, which is fun.
But then all of that has sort of been priced into those numbers we're seeing, and then suddenly the sector is churning out very huge numbers. If you look at their margins also is quite resilient. I mean, margins both on the profitability basis, return on average equity, return on asset. These are quite staggering. Return on asset touching about 50%, return on average equity about 30%. These are quite attractive ratios. However, I still feel there's still a lot to be done. Now, coming back to the reform, which is the biggest catalyst we're seeing right now, clearly the NICOM clearly has come up to say, presidential assent, which we just got a couple of weeks ago, right? We're looking at recapitalizing the sector, minimum 5-fold. So if you look at it across business segments, if you look at life, for instance, it used to be 2 billion, now it's jumping to 10 billion. For non-life, that used to be about 3 billion. That's going as high as 15 billion in terms of capitalization. And that goes all the way to composite insurance, which used to be about 5, and now is expected recapitalization number is going to be 25 billion. And then for reinsurance, which used to be about 15, they're expected to have about 35 billion in share capitalization. Now, what this means is that we should be looking forward to some upward repricing in share prices, because these insurers have to come to market to raise capital. They want to raise this capital at some very decent valuation, right, such that they can attract as much funds as possible to meet up the capital requirement. Again, you want to ask yourself, in the industry, as of today, which of those players is currently meeting the capitalization or currently has a gap? So you have a couple of names. I mean, we run these numbers every now and then. About 5 names clearly already hit the capitalization mark.
That's for the insurance industry.
For the insurance sector, right? I don't know. Can I call names?
Let's hear them.
I mean, we have name. I think we should have Mansard on that list. No, did I say 5? 4 of them.
4.
2 more, which is not coming to my brain right now. So clearly, that means about 90% of the players in the industry has to raise fresh capital. What does that translate to in terms of funding capacity that is needed? That's roughly 600 billion to 1 trillion naira of additional funding required to adequately capitalize that sector. Now, the next question is, in the context where we see the banks looking to raise about 4.5 trillion naira. Does that create additional capital squeeze or liquidity squeeze in the market? The government itself is talking about raising maybe about
Everybody's trying to raise
8.5 trillion naira to bridge budget gaps. So does that create additional liquidity strain? I don't think so. I think we have the big players within that space who are the OGs in the sector. They clearly would have the right mechanism, have the right structure to attract these funds, and that's part of what we're seeing. Investors repricing this sector based on this capitalization reform.
Right. It's quite interesting because I was looking at most of your recommendations. I think I saw the one in July.
Yep.
And under the insurance sector,
segment,
I saw it was mostly buy for all of those assets there.
Yes.
But I think that has changed.
Yes.
A few are on you have to reduce. Some you might want to sell. At this point. But with this momentum we're seeing so far, normally we've been used to 9% closes for the index. That's last week. It's mostly 9%. Started the week I think 9%, about 9 point something. But yesterday was 7 point something. Is it fizzling out gradually?
Well, there are two sides to it. There's the market. The market itself, you have those who are trading. They're looking for opportunity to bargain on and quickly take profit. So you can't discount that out of the market. People, if I were positioned in the market and I've seen 100% on the stock, no brainer.
Because consolidated hallmark insurance, that's done about 70%.
Yes, no brainer. In a few weeks, no brainer. I want to take the profit, right? Yeah, take the profit. There might be a bit of pullback, and then I can come back into the market. So the traditional trading cyclicality or the psychology that comes with trading in the market, yes, all of that will happen. But that does not take away from the real story, which is that the sector is currently going through a reform which seeks to adequately capitalize it such that it's able to compete more aggressively globally, even leveraging after, right, to churn out products that can sell across Africa, digitize the sector more adequately, and more importantly, pursue penetration or drive further penetration in Nigeria. So these are the big story for the sector, which I think we'll get to see how this evolves.
And looking at the rally so far, is it early to still enter the insurance stocks at this point, or is it getting late, in your opinion?
So you want to do a very, so let me just talk on a very broad, high-level basis. It's not early, it's not late, right? If you're reading the markets prior to now, you're positioned, you're seeing some gains, you want to take some off the table. It's not saying that, everything is going down. It's just being, you call it part of risk management when you talk about portfolio and investing. You're coming in as a new entrant. You want to be clear with your objective. Why are you coming in? Are you buying into the long story, or you're just trying to play the short story? I think it's always advisable to buy the long story, buy the market for the long haul. For the short story, you can also still come in. However, you got to keep one of your eyes open because prices could retrace steps at any point. Right.
And, at this point, we're seeing, I guess we can call it reforms-driven rally at this point. So which sector is next? What reform are we expecting now? That could, rally maybe consumer goods or, what's next at this point?
You want to look at it from sectors that has some sort of regulator behind it to provide some sort of sanity, so which most times you find within the financial services sector, because of course this is finance. We're talking money, people's money, which is the ordinary investor with their small 1,000, 5,000, 10,000, 2,000. They are the ones that need the most protection because they are the most vulnerable. So because of that, you have regulators all the way from the Securities Exchange Commission that oversee activities within the pension industry. You have the PENCOM. For insurance, you have NICOM. For the banks, you have the Central Bank of Nigeria. So sectors where you find that there are structure sitting there with a regulator, having regulatory oversight, then you can anticipate continued reviews in pursuit of advancing progress and enhancement of deeper, broader development for the sector.
Oh, we have regulators in oil and gas.
Well, for oil and gas, I mean, yes, indeed, we do, but I think we've seen some reform already. The PI is there, everybody's talking about it. How aggressively is it being implemented? Well, yeah.
There's still the implementation issue, right?
Exactly. So, and then you have some other external factors, or crude oil price, crude oil production, OPEC somewhere in the corner, US somewhere in another corner with their oil shale production. So a lot of dynamics can come into that space to shape things up. But for the other sectors that has maybe a fewer variables that could sort of tilt or affect, mostly within the financial services sector. For consumer goods, you think more broadly about macro. Macro environment will shape up how the sector.
So I guess if inflation dramatically drops, that's good for consumer goods.
Yep. Foreign exchange, more importantly, appreciates a lot further. Then maybe, for instance, there might be smaller subsector themes. For instance, there's some aggressive push from federal government, maybe through the Ministry of Agriculture or something, to pursue some backward integration program that can enhance cost efficiency within this consumer space. You could have a bit of all of that. Are we tilting towards, are there policies to drive us towards self-sufficiency within specific sub-segments in the sector? Even logistics, for instance, is another big sector which nobody really is talking about. Do we have sufficient reforms, policies for that space? I don't think so. So there's still quite some work to be done to, lift things up for
right.
For
and definitely, I guess at this point we keep it a close eye on most of these reforms coming up. But we've seen this rally, for the NGX, still, at all-time high levels, and I'm sure there's still expectation for more highs, in 2025. But how does all of this, spill into Nigeria's economy? Because they said, the capital market is the barometer.
Oh, yes, indeed, it is a barometer, and it works. It's a two-edged sword, sort of, right? So we've seen very deliberate, concerted efforts from the fiscal side and monetary side in terms of policy, communication, and all of this is helping capital market to shape up. And more importantly, if you look into the capital market itself, the composition of foreign participation, local participation, is still tilted towards local participation. And local participation, that's local money.
Right.
It has nowhere to run to. We've seen what's happening in the yield markets or the fixed income market, where yields are contracting quite, with some speed behind it. Now, what that means is that some of these monies that comfortably play within the fixed income space would naturally gravitate towards equity in search of better returns, or somewhat you call it risk-adjusted returns, So we expect to see more of that. So for me, the capital market currently, I'll say, is living the life. It's living the life, and I expect this could linger for quite a while. I know there's been sentiment that isn't this bull run too fast? Isn't it too aggressive? Isn't it going too... but then the market has been held down for quite a long while. We've had many years. The last 10 years has been quite devastating for the economy, for the capital market itself. Even though few years within those years, you will see some double-digit sort of returns,
right.
And then subsequent years it contracts again. But I feel this is a period where, looking at the policy we've seen, the numbers we're seeing, our half-year report, we call it statistical gains, social strains.
Right.
Because statistically, we think a lot of gymnastics is being done. Look at what was done with GDP rebasing, the inflation rebasing, and all of that should translate to more attractive or meaningful numbers. Does that translate to improvement in social lives? Maybe.
That's another story.
It's another story.
Fantastic. It was great having this conversation with you. Thank you so much for coming in today, Mr. Abiodun Kerikwe, MD, Afrinvest Research and Consulting. We'll keep tracking this market if it goes up forever at this point. Well, thank you so much.
Thank you for having me.
To the commodities market now, we have Dr. Ifeoma Iwokolo, the Vice President, Economic Research, Financial Directives Company. Let's try and get it again. Great to have you on the show, Mark. Good morning.
Good morning, Ladi. Thank you for having me.
Fantastic. So, definitely, we did talk about oil production. We like to take stock, see who's producing more, who's producing less, and who's meeting quotas at this point. But we have the one from OPEC, 1.5 million barrels per day. That's for July and Nigeria. Then we also have the one from the NUPRC, slightly higher, mostly higher, 1.7 to 1.8 million barrels per day. Talk to me here. Where do we find the balance? What's the real one?
Can you hear? I can barely hear you, Ladi.
Okay, can you hear me now?
If I may hear you clearly,
yes.
I'll say the disparity. Yeah. The disparity in the data we are seeing, of course, when you are collating data, the source of your data matters. And the description of your data is also important because description of your data is going to have what combination is in that data. So what we are seeing from OPEC and the UNPRC is disparity of data, and this is because there is the data source is different. For OPEC is sourcing its data via secondary and aggregated data. Why OPEC? Of course, OPEC is within Nigeria, so they use direct operator reports within Nigeria and on-ground monitoring. This is one of the reasons why we have disparity in that data. Also, the coverage difference. For OPEC, they are focusing majorly on crude oil data, while for NUPRC, they are looking at both figures, including crude oil data and condensate. So this is why we are seeing this disparity. And for OPEC also, they are also focusing on data compliance, while NUPENG is reflecting operational realities, and they are more immediate. So this is why we are seeing disparity in the data. But even at that, we know that oil production has continued to increase in recent time, and this is because there has been a crackdown on oil theft. There has been a crackdown on pipeline vandalism and also unrest. That's what we are seeing. And for June and July, I would say we have been able to enjoy near 100% availability of major crude oil pipelines. Yes, that's why we've seen this sustained increase in crude oil, even though it's not up to the benchmark, of course. We have surpassed or we have hit OPEC quota, but we have not been able to get to our crude
budget
oil
quota
benchmark.
Yes. Right. Well, we're definitely trying to get there at this point, but because that drives revenue for the government. But given that Nigeria's surpassed its OPEC quota in July, and Nigeria plans to request a higher quota at the OPEC meeting at some point. How would this deferring production influence credibility of Nigeria's case when petitioning for more quota for the country?
Yes, I would say that this disparity in figure may pose a challenge to Nigerian credibility in petitioning for a high OPEC quota. And why I say this is because we need to kind of address this issue and maybe align with OPEC methodology. Yes, OPEC methodology, we should maybe exclude the condensation from what we are reporting so that we can be in line with OPEC. So there's need for alignment and there's need for transparency to let OPEC know what is included in our data. So Nigeria may have to make a convincing case that its production capacity will genuinely warrant an increase in quota. So once we make this case that our capacity warrants increase in quota and we are able to sustain it we've just gotten to the quota. Yes. Is it sustainable? This can only be sustainable if there are no hiccups and if there are no distractions. So once we are able to sustain this over a period of time, of course, OPEC will not say, okay, because we have gotten to the quota, we are extending. They will, first of all, see that we are able to at least sustain it for some time or even increase beyond our quota, like other countries are doing. Like for Saudi Arabia, they've increased their quota with OPEC by over 400,000 liters, hitting about 9.8 million barrels per day. So if we can prove ourselves that we can do beyond that, I think OPEC will likely give us. But first and foremost, what we need to do is there must be transparency to clear the data disparity before we can talk about it.
All right, let's look at PMS prices now. We see the Dangote refinery, they reduced the ex-depot price of PMS by about 30 naira per liter. That's from 850 to 820. Definitely, I guess we should be excited, with that. But, the Oliver Twist in me wants more. But where do you see this, how do you see this impacting commodities market?
Okay, so for PMS prices, I think the price cut is part of the market adjustment, because in recent time we have seen that global oil prices are beginning to decline, and PMS prices are dependent on three different factors, which is global oil price, the exchange rate, then the add-ons, which is the logistic cost. So and Dangote has given us his word that once that his prices will be determined by global oil price, and he has been doing so. So the cut we are seeing today is because of the decline in global oil price. As at this morning, the global oil price is at deep to $65 per barrel because of the excess supply that we are seeing and less demand. So as this happens, we are going to see price decline further, even though there's usually a lag of when price decline is announced and when the marketers and also the petrol stations begin to sell aligned with the price. And this is because if they have an old stock, they would definitely want to sell off the old stock before they have the new inventory. I think before the end of this week or next week ending, we're going to see these prices reflect in the pump price and also the market price. Then for commodity prices, I think we know that this part of the world, prices are sticky downwards, even though we're in harvest season. With this new development, supposedly, it's supposed to even bring prices further downwards. But for now, we are seeing commodity prices decline because of harvest season. Yes, beginning of harvest season, I was seeing that there is increase in supply of food commodities, coupled with the fact that exchange rate has been stable for quite some time. So imported commodities prices are lower.
Right.
So the PMS prices is going to be a plus if we see the changes in transportation fare, because that is majorly what drives the commodity prices.
Okay, well,
Yes.
We do expect, hopefully that, these prices go lower and, we see some strengthening with the Naira. Definitely, that's a nice break for the Nigerian consumer. But thank you so much, Dr. Foma Wokolo, Vice President, Economic Research, Financial Derivatives Company. Thank you for coming on today.
Thank you for having me, Ladi.
All right, so next conversation now, we see the hospitality industries demonstrating remarkable resilience and recovery post-COVID-19 era. Globally, hotel occupancy rates have not only rebounded, but in many regions exceeded pre-pandemic levels, averaging around 72%, up by 8 percentage points compared to 2019. Then we see the contribution to Nigeria's GDP in the first quarter of 2025. Accommodation, food services, that grew by 2.65% in real terms. Restaurant and hotel projections estimated growth there, that could reach about 24.37% by 2028. And we see the WTTC projecting Nigeria's tourism sector will reach 11.2 trillion in GDP contribution in 2025. Quite the projection there. But let's drill down on what's really happening. Joining us for this conversation, we have Mrs. Rita Opias, is the General Manager, Park Inn by Radisson. Joining me right here in the studio. It's great to have you. Good morning.
Good to have you. Good morning, Laddie.
Yeah.
Yeah, thank you for having me.
So, post-COVID-19, I guess we can say things are looking up for the hospitality industry. Then if you're looking back at, last dirty December, definitely we did see, some green light there, for your industry. So, talk to me about, what's happening right now, how you're seeing the recovery, so far for hospitality industry and hotels.
Okay, thank you. Pandemic, it's something that it can't really erase from human in any case. So COVID-19 was actually a global nightmare. People lost their job, people lost their life, and for the life of the people that lost, may God continue to give them eternal rest all over the globe. So, but the significant thing is, immediately after the pandemic, there was rise in jobs. And the hospitality industry, there was this remarkable resilience in occupancy, in gaining back guest confidence, both B2B and B2C. There was that growth. How it happened, we don't know. I think Nigeria was actually one of the countries that rebounded almost immediately. So I will just narrow it down, just to give, for the benefit of the conversation, just in my own property, just to give an insight. Parking by Radisson VI, is the one of the brand in Radisson Group. So after the restriction, we could see the rise of B2B. Because people want to connect with their colleagues. There's a lot of team bonding, business activities, there's a whole lot of conferencing. Then to B2C, we see the rise in B2C because a whole lot of people were starved in connection, a whole lot. So there's a whole lot of influx, of staycation, and parties everywhere. So I would say in general that everybody, both upper mid-scale hotel, mid-scale hotel, lower mid-scale hotel, they all participated in the market share. Yes, some could be more than 50%, and some could be more than 45%, some could be more than. So for us, I think we got a whole lot of about 50% market share. So the rebound was so remarkable. It's so remarkable. And another thing, it also helped us to, have the opportunity to create more strategies to navigate. Should there be any uncertainties? Because are there going to be uncertainties? Definitely no, but I don't wish to be pandemic in any case.
No, we're definitely not going there again. Hopefully, at this point.
But at least we have the strategies to navigate. Should there be any?
And we still have geopolitics to deal with at this time. We're seeing protectionism. We're hearing countries like the US saying you have to put down a bond, before you can travel there. And we know how Nigerians love to travel out to enjoy. But I guess this is pushing us towards domestic tourism, at this point, because I'm looking at it and I'm saying, what, I want to enjoy Nigeria. I want to enjoy other parts of Africa, at this point. I don't want to go out, even though, some people love that, they like to, go for summer vacation out of the continent and all of that. So how are you seeing domestic tourism, so far? How are you guys, positioning, for that? For Nigerians that might want to just stay here, and maybe other African, countries want to come here to Nigeria and have fun.
I think that's made two of us. Because I have a huge concern for domestic tourism. It's something that we have to really focus on. And I'm happy that what is going on, because the pros and cons, I'm looking at the cons, Now, the number one thing is, everybody knows when you get visa, you get tourist visa. Hardly you get business visa. What are they going to do? They're going for tourism in another country. So they are feeding the GDP of the country. Now, with the currency fluctuation and the high cost of travel, international travel, so it has made us to see opportunities here in Nigeria to promote our culture and heritage. And I give it to the social media content creators. They have also done a very good job. They have really, really projected Nigeria. As a matter of fact, you could see in my own property, you could pop into a guest in the morning for breakfast, and you see that this is a brand new client. He doesn't know about Nigeria, but he wants to come visit destinations. He wants to come explore Nigeria. So it helps us. So it also helps us for people to look inward, because they are promoting destinations, and people, families, friends, groups, reunioning, they want to go there as well, to visit those destinations. So they are projecting out very well, and I'm really happy what they are doing.
Right.
Social media has its own advantage.
Yeah, because sometimes it could either be a call out, or maybe they're trying to help somebody's cause, when it comes to social media. But, definitely we know that, some of these influencers, most of the time, I follow some of them, and, they tell you about spots in Nigeria that you've not, visited before, and they make it look so good. And I'm wondering, is it really that good?
To be honest with you, it is. Because the team bonding I had last year is through social media. I pop into social media, and I had the destination that we're actually projecting. So I sent my team to go there. We went there, and we found it. And it was really pretty. It was nice. And that is where we've been using for team bonding. As a matter of fact, next year, we went there last year, we went there this year, and by God's grace, next year, we're going to go there. So, but the only thing is just for us to be more intentional and put a bit of professionalism. What we project is what we see. That's only what the advice I can give.
What about on the security front? Because definitely when you hear some of these travel advice, coming from outside, the continent, outside Nigeria, there's also that safety concern. How much does it discourage some clientele from abroad, coming in, to the country and actually using services here?
For me, I think everything is braveness. Security concern is virtually everywhere. If you're even traveling out for a tourist destination, you can't really say what you can see there. But the only thing that you have to put the security measures in place. And that is also what Nigeria, or rather the hospitality and tourism sector, that is also what they are focusing on, and they are big on that. Because if you don't give security to the client, you can't give them any confidence to come. So they are really putting that in place, and it's working.
Right, and definitely there's also that mix of, you have the business traveler, you also have the, leisure traveler, at this point. What's the mix like, in your experience?
Okay, for us, the current clientele is a mixture. Is a business mix of business and leisure travelers.
Pleasure.
Yeah.
Exactly.
Yeah, pleasure of. So, whilst during the week, we have a strong presence of business. Then weekend, the leisure dominates the weekend, public holidays, and it also has made us to target marketing and also to create more packaging. Now you can see that as we are going towards the end of the year, we are looking forward for Dirty December. As a matter of fact...
Is it going to be dirtier?
Oh, it's going to be dirtier, man. Because, last year, I was going through the through the hotel intelligence, and it was projected that, as a matter of fact, Dirty December boosted significantly the Nigerian hospitality sector. And we are hoping it's going to happen this year, even more.
Are we seeing bookings ahead?
Like guaranteed. For my hotel, Parking by Radisson VI, guaranteed, I mean it, guaranteed booking. You can imagine that we realize, with the analysis, 54 billion naira. In USD, about 37 million USD. I mean, it's a lot. It's a huge contribution to the Nigerian economy. I mean, I can see some countries that depend on the tourism sector, and they are thriving. So,
Yeah, fantastic.
I can't wait, because our brothers and sisters, we are very good in family values.
Right.
So in diaspora, they have created enough awareness.
Right.
Yeah.
And that's great, definitely. But very interesting conversation. But right now, for our DSTV viewers, we're going to join a live coverage. The Tertiary Institution Staff Support Fund launch. That's happening for DSTV viewers, but you can continue the conversation on Business Morning on all other platforms. And right here, we've been talking about the tourism industry in Nigeria, what to expect for this December, and definitely you said it's going to be dirtier.
Dirtier,
at this point. I'm definitely looking forward to that, and who knows, maybe I might just enjoy it. Hopefully I'm not working.
Unfortunately, last year I traveled. This year I said no, because I was over there and I was hearing it's getting hot. It's hot. Now I'm going anywhere.
Yeah, so I guess everyone's getting ready
Absolutely.
At this point. And we hope we bring in all of that, because I love tourism money.
Absolutely.
It's forex that stays. It doesn't have to go. It's not hot money. It's not, FPI. I like that. So what do you think? Very genuine. Yes. What are you seeing for the remaining quarters now, for the hospitality industry?
Yeah, at the moment now, it's a bit low. It's a bit slow. Because I believe, I also asked some of my colleagues, it's a bit slow. So I believe that so many people travel for summer holiday. So it's a bit slow. But getting towards the fourth quarter to the end, we've had that traffic in inquiries and confirmed guaranteed bookings. So at the moment now, it's a bit slow.
Right, but are you seeing, other African countries actually, ramping up tourism at this point? Who do you think we should be learning from when it comes to, most of the countries doing well now with tourism?
I think Kenya and Tanzania. They are very, I follow their trend, and more especially Kenya. Kenya is very, very intentional about their tourism sector. They are feeding it. They are feeding it as much as they could to attract investors, to attract, other tourists to come in.
Right.
So they are feeding it. I'm following their
Kenya
trend. Yeah.
And Tanzania.
Yeah.
At this point.
Kenya, yeah.
Thank you so much. It was great having this conversation with you. Ms. Rita Opias, General Manager, Park Inn by Radisson. Thank you for coming on. And right now, while we're here, I'm going to bring in John McQuarrie to give us details on what's playing on the global economy. You're going to the global economy. I guess you're not doing Dirty December here in Nigeria.
No. And Ladi, before now, I challenged you that your next vacation has to be
on the
somewhere
continent.
On the continent.
Yes.
Kenya now has free visa for every African.
Right, no bond there.
Exactly,
I don't have to get a bond.
Yeah, exactly, no bond. And there's a direct flight from Lagos to Tanzania. She was talking about Tanzania. So, Ladi, if I hear you queuing for visa.
I am not importing
queuing for visa.
Tourism. I'm not importing leisure.
Good morning, everyone. Welcome to the global news segment of Business Morning. We start from the United Kingdom, where the economy grew at a faster rate than expected in the second quarter. This is according to official figures, and that's despite a slowdown from a strong start to the year amid pressure from tax increases and, of course, Donald Trump's global trade war. Figures from the Office for National Statistics showed growth in gross domestic product, and it slowed 0.3% in the 3 months to the end of June. That's down from a rate of 0.7 in the first quarter, although beating city forecast of a slowdown to 0.1% growth. And this, the latest snapshot, underscores the challenge for the Chancellor, Rachel Reeves, as she considers options for boosting the economy and raising revenues for our autumn budget. The economy was weak across April and May, with some activity having been brought forward to February and March ahead of stamp duty and tariff changes, but then recovered strongly in June. Congratulations to the United Kingdom, even if it is short-lived. And still in the UK, Sir Keir Starmer will be joined by the Ukrainian president at Downing Street this morning. And they are preparing Europe and all, bracing for that outcome of Donald Trump's face-to-face discussion with his Russian counterpart, Vladimir Putin. That's supposed to happen later this week. I believe that's tomorrow. The Prime Minister's meeting with Volodymyr Zelensky comes after he said that Britain stands ready to increase pressure on Russia if necessary. Meanwhile, United States President Donald Trump has warned of very severe consequences if Russian President Vladimir Putin refuses to end the war in Ukraine following the two leaders' upcoming summit in Alaska. Trump made the comments on Wednesday after holding a virtual meeting with European leaders, including Ukrainian President Volodymyr Zelensky, who pressed the U.S. president on the need to ensure that any peace deal does not sideline Kyiv. Now, away from the UK, July was the busiest month on record in the 117-year history of the Port of Los Angeles. The port handled over 1 million 20-foot equivalent units. That's about 8.5% more than what they handled last year, July. Retailers, manufacturers brought in goods at an elevated pace due to concerns of higher tariffs. That's supposed to come on later on this year. We know, of course, there's that reprieve between U.S. and China, and I guess a lot of importers are trying to beat that. So reports indicate that shippers have been front-loading their cargo for months to get ahead of tariffs and recent activity at the America's top port. That really tells the story and captures it. And this has been confirmed by the executive director of Los Angeles Port. He says terminals in July were jam-packed with ships loaded with cargo processed without any delay, much to the credit of their facility. India and China are discussing resuming border trade of locally made goods after more than 5 years, marking the latest step in a slow but steady effort by the Asian neighbors to ease long-standing tensions. And both sides have proposed restarting through designated points on the shared border, and the matter is currently under bilateral discussions, asking not to be identified. Some sources right there, but they can confirm that China's Ministry of Foreign Affairs has said that they are willing to step up communication and coordination with India on the matter. For over 3 decades, India and China have traded locally produced goods such as spices, carpets, wooden furniture, cattle fodder, pottery, medicinal plants, and ore through 3 designated points along their 3,400-kilometer disputed border. The trade value is relatively small, estimated by just about $3.16 million. So we might be seeing activities, and obviously being pushed and motivated by the U.S. tariff. Still staying on India, now wholesale prices fell 0.58% year-on-year in July. According to government data, the decline was steeper than the 0.13% drop recorded in the previous month. It also exceeded economists' expectations, who had projected a 0.3% year-on-year fall in the wholesale price index for July. The government released the data as part of its regular economic indicators report, providing insight into price trends at the wholesale level in the Indian economy. Let's go to Europe now, where French consumer price inflation remains stable at 0.9% year-on-year in July, matching both analyst expectations and the preliminary reading. This is according to data released by the Statistics Office. The harmonized inflation rate, which is adjusted for comparison with other Eurozone countries, held at 0.9% compared with the same period last year. The figures confirm that preliminary estimates previously published by the French Statistics Office align with market forecasts for the month. And the Philippine Central Bank, they've ordered mobile wallets, payment apps, and other supervised institutions to remove links to online gambling platforms within 48 hours. The Deputy Governor, Mameto Tangonan, said that the directive follows a decision by the Monetary Board that was announced at a Senate hearing. Senators are debating proposals to restrict or ban online gambling because of concerns over debt and addiction. While President Ferdinand Marcos has said that a ban could lead to more illegal betting under the table and all of that. But e-wallets such as GCash, owned by Mint, have played a role in online gambling's growth. And so they're looking to check that. But of course, they're also conscious of the fact that there's a total ban, and they might have under the table transactions going on which could not or may not be monitored and regulated, and might even lead to worsening consequences, Ladi. So the gambling or the betting in Nigeria, the betting sector is growing, very vibrant in Nigeria. But here in the Philippines, they're trying to put some checks on it, and they're afraid of addiction.
Oh, very important, because there's one thing about poverty. It makes you want to gamble most of the time, and when you hear winnings of some people maybe close to you or far away from you, you feel like it might be your chance. With a country with 150 million multidimensionally poor, and you feel like betting might be the way out.
So you think poverty is
a major cause?
Is a motivation.
Yeah, it's a motivation because they're trying to make money, trying to make life-changing money as fast as possible.
Yeah, it's the first I was looking for, because if you're really trying to make money, there are so many other ways. So I believe it's the speed.
Yes, you want fast money.
That is the motivation here, fast money.
Yeah.
So, but remember, your fast money comes in fast, goes out fast.
Exactly. And I did, watch some documentaries earlier about, people that are struggling with gambling addiction.
Exactly.
And, it gets tough because it almost goes beyond, trying to make money. Sometimes you just get addicted to trying to...
Just the excitement.
The excitement of winning, forecasting
and being
something.
part of it, exactly.
The lottery.
I believe they have a bigger problem in that area in the Philippines, and that's why the government is, from the presidency, is getting involved in curbing it. But, the interesting thing is they know if they put a total ban on it, it gets even worse. Because, some people will find... Yeah, some people will find...
the black market.
And then it gets worse. You can't even control it. You don't have a say in that. So
all right. So if you're a gambler there struggling, at this point, just calm down.
Laddie has help for you.
Just calm down. Fantastic. Thank you so much, Eddie, for giving us the details there. But I did peep again into what's happening in the markets there, Nigeria's equities market, and we're seeing most active trades again. The insurance names are there. If you're looking at investing.com, you're seeing Universal Insurance PLC. That's up. Actively being traded, Veritas Capital, Sovereign Trust Insurance PLC, Link Assure. So we're seeing the insurance companies again dominating. That's the most active trade right there on the NGX. And we also see Japan Gold there on that list. And for the gainers, even though this is not final, it's what the investors are focusing on right now. I've seen Airtel Africa there on the top gainers counter, Ela Lakes, FTN, Cocoa Processors. That's what's trading right now. Mansard is also up there. Consolidated Hallmark Insurance is also there. So insurance, again, doing what it does best in this market. But we'll get you the final close for today, even though we did get that bearish close yesterday. Let's see if we can get a bullish close today and for the TGIF trade tomorrow. Let's see if investors, come with that vigor that they've been used to for a while now. Maybe we'll see another all-time high. But I hope you're able to get direction right now with your next trade. Thank you so much for watching. If you're watching Business Morning live on Channels Television, I'm Laddie Williams from me and the team right here at Channels HQ. It's bye for now.